when you look at what makes a good insurance partner for any of the companies that are operating this space, particularly asset managers, you want to make sure that you're working with an insurance company that's going to be there in good times and bad, right? Very much like a solid personal relationship. And I think one of the really important kind of hallmarks of our genuine support for companies operating in this sector.
Hey everyone, wherever you are, I hope you are having a wonderful week so far. We're here with the latest episode of the Inside Crypto Show, interviews and discussions with regular people just like yourselves. Today we're joined by Joseph Ziolkowski, CEO and founder at Relm Insurance. Relm Insurance, a leading specialty insurance carrier supporting emerging and innovative industries. I know we've talked about this when I've talked to you guys. Crypto needs more insurance companies, and here we are today, finally talking to a guest who can actually answer all the questions we've talked about and discussed. So they've launched a Web3 suite of products, including Alpha Web3, which we're going to talk about today. Alpha Web3 covers digital asset funds or investment managers. So before we get into all the juicy stuff, Joe, tell us about yourself and the beautiful weather that it looks like you're having.
Thanks for the intro. Appreciate the enthusiasm. And thanks for having me on the podcast. It's great to be here. I've spent almost 15 years in the insurance industry, in different aspects of the insurance industry. Fortunately, I came into the insurance industry, which I think is seen by a lot of people as being a pretty boring industry, in a pretty interesting manner. I spent a lot of time in a niche of the insurance industry that's commonly referred to as the alternative risk transfer side of the insurance industry. And this is where all the complicated product development initiatives, capacity creation initiatives, self-funding, risk retention type initiatives go that can't be accommodated effectively through traditional insurance market channels. So I spent almost a decade setting up insurance and reinsurance infrastructure to solve problems that weren't readily solvable through more traditional channels. And it gave me a really important and clear perspective on what the traditional insurance market does really well and the strategies that need to be employed when you're faced with non-standard risks. And so it was really with that background that I was able to have some really important experience dealing with regulators in different jurisdictions, insurance regulators in different jurisdictions, deeply engaging with companies to figure out how we can use insurance products and solutions and strategies to solve really important problems. And all of that really prepped a great foundation to face what I think is one of the most interesting challenges of building aligned products and capacity behind an industry that at Relm Insurance, we have a lot of belief in, a lot of hope for.
And I don't know why I just didn't come across your name sooner. So you mentioned like things that traditional insurance companies do well, right? So they do some things well, of course. What is that area that you guys touch and target that they don't do well that you do better?
Listen, insurance is an amazing industry, right? It's a massively important aspect of financial services. It aggregates literal trillions of dollars on balance sheets of some of the most important companies in the world. But it has operated largely the same for 350 years, right? And by design, insurance is a backwards looking industry, right? If you think about the way insurance works, it ingests and digests troves of data for certain types of loss events and uses that data to predict the future, right? It's predicting the frequency and severity of losses related to catastrophic weather events. It's predicting the frequency and severity of security class action lawsuits. It's predicting the frequency and severity of cyber related losses, right? And it predicts the future based on the availability of data from the past, right? So when you have a lot of historical information, it puts insurance companies and actuarial scientists in a really strong position to understand how to price and reserve for future loss events. So that's what insurance does really well. What it doesn't do particularly well is come up with adequate aligned strategies for loss exposures for which there's no historical precedent, right? For which there is no historical trove of data that can be used to confidently predict the future frequency and severity of loss. And so as a matter of creating a line of demarcation regarding what insurance does really well, it does extremely well creating insurance products and providing support to more traditional companies looking for solutions for traditional risks. And that's kind of where companies like Relm come in. Because just because you have loss exposures that are new and emerging doesn't mean they can't be underwritten, doesn't mean that they can't be priced. It just means that it doesn't fit in risk appetite within the various committees and bureaucracy that exists in a much slower moving aspect of the insurance market.
And a follow-up question to
Okay.
that is, if you're listening to this episode or watching this episode, and go ahead, pause the button, go to Relm Insurance, you can see it's not just Web3, it's not just crypto. You guys do a bunch of different stuff. So this
Right.
is a hot topic. If I don't ask this question, this just helps boost the algorithm. So given the lack of historical data in some of the areas that you guys focus on, do AI and large
Right.
language models play a role in you pricing in insurance strategies for the future, right? Because they can make do with maybe less data than a traditional actuary could make do with, maybe. Again, I'm just second guessing, but does this invention of ChatGPT and Gemini and all that stuff help what you're doing at the moment?
Karen, I wish I could sit here and say we had this really sexy machine learning algorithm that was processing all these different data points to efficiently and effectively and profitably price risk related to exposures arising from companies doing really innovative things in the different sectors that we support. But the reality is those large language models or even small language models function effectively when they have a bunch of data to consume, inform, and create decisions around. And I think that comes down to a really important decision that we made after receiving our license from the Bermuda Monetary Authority in December 2019. And it was really the reason we received the license from the Bermuda Monetary Authority, which is, if any of your listeners know anything about Bermuda, or perhaps they don't, it's a 21 square mile island in the middle of the Atlantic Ocean, but it is arguably one of the most important insurance jurisdictions in the world. It's the second largest insurance and reinsurance jurisdiction in the world. $250 to $300 billion of insurance premiums flow through some of the most significant and important insurance companies in the world. Right? It's one of the most sophisticated insurance and reinsurance regulators, and some of the most interesting and complicated things have been solved by companies domiciled in this jurisdiction. So getting a license in a jurisdiction like Bermuda is the first mountain to climb, right? And for us to be able to obtain that authorization back in December of 2019, we had to have a rational approach for how we were going to answer the question that you just asked. If you don't have the historical data, how can you be certain about your risk selection criteria and your pricing? And it really comes down to fundamental underwriting, right? And when you look at the way the insurance industry underwrites today, I would say in a lot of respects, it's gotten away from fundamental underwriting. And what I mean by that is in the context of evaluating and categorizing companies within a sector like crypto and Web3, as an underwriter, right? Your core objective is to categorize good risk. And if any of your listeners have ever had to apply for insurance, typically you fill out an application, which is like a questionnaire, and it asks you a bunch of things, and then you have to sign and date it. And oftentimes an underwriter at an insurance company is on the other side of that transaction, and they're trying to categorize you as a good risk or bad risk based on this very simple questionnaire. When you're underwriting companies for which there is no historical trove of data, we need more than a completed questionnaire. And so our underwriting approach and philosophy was very, I think, logical, but not particularly exciting. It was merits based, right? If you have a company that's operating as an asset manager, we want to know about your background. We want to know about your investors. We want to know about the jurisdiction you've elected to set your funds up in. We want to know about the capital structure. We want to know about your experience. We want to know about your cash flow run. We want to know about future fundraisers you're anticipating, right? We go through this exchange and engagement with the people leading these companies so that we can have an understanding of how this company is going to generate revenues, satisfy concerns related to stakeholders. And if we can get access to that information, we can start making an effective risk categorization effort. And if you broaden that aperture and you put yourself in the shoes of an insurance company that's looking to put its balance sheet on the line for companies operating in what we could all agree is a variable and volatile sector, how do we protect our balance sheet from the risk of insuring companies in this nature? And one of the core strategies that we deployed at inception was creating diversification within these concentrated sectors, right? So when I talk to you about Relm's appetite for Web3, certainly we're going to spend some time talking about asset managers. But the reality is we've provided insurance to exchanges, payment and remittance platforms, custodians, software developers, foundation, really companies operating in every subsector of the crypto ecosystem that gives us access to not just really critical insight on how the sector itself is evolving, but sources of premium from relatively uncorrelated risks that enable us to build a sustainable and profitable portfolio of coverage. The strategy starts with an effective evaluation of a particular account or company, and then replicating that same approach over and over across as many companies as possible. And when you look at what we've done over the last 5 years, I think we have the most interesting perspective of any service provider in Web3. We have insured companies in 40 countries around the world, publicly traded, privately held, early stage, later stage, regulated, unregulated, centralized, decentralized, right? And we have this cross section of information and data, wins, and of course, losses, which are claim payouts. And all of that has really put us in a fantastic position to increase the confidence in the way that we price. And
Given like the volatility that's happened, you mentioned it, right? It's crypto's up and down while things in the US have moved forward and other jurisdictions as well with ETFs. Why go after crypto? They're in that category of alternative insurance sector. Like,
yeah,
why do Web3? Why do crypto? Why not stick to other areas that are more stable? What propelled you into the arena?
yeah, it's a great question. So I invested in Bitcoin in 2017. And at that time, it was purely speculative. And I'm not ashamed to say that. It was a momentum play. I had some good friends that were like, listen, buy some Bitcoin. And I did. And I was casually interested in what was going on in the crypto marketplace. But the real, I think, inflection point was this opportunity we had to set up a really interesting risk financing solution for a US based crypto custodian, right? This was a company that needed the equivalent of a commercial crime product, right? Commercial crime insurance is an insurance product that provides companies with a source of financial recovery in the event of a theft of financial assets, whether that's external or internal through employee dishonesty or employee theft. And as you can imagine, this company couldn't find an appropriately scoped commercial crime policy anywhere in the market that was going to cover the spectrum of exposures arising from providing safe custody of digital assets. And because they couldn't find it in the traditional market, they came to us as a potential solution provider to see if we could create this product for them. And it was really the first time that I had the opportunity to look under the hood, so to speak. I looked at the two founders of this company, one of whom had deep background in traditional finance, very credible. Co-founder had a deep background in traditional tech. Okay. And they cared about compliance, right? They cared about providing a custody solution that was going to be fit for institutional users, not institutional in the crypto sense, institutional in the traditional financial sector sense. If you looked at the funding that they had raised to that point, these were credible investors, institutional investors. If you looked at the board of directors, they had board members that absolutely had reputations that were worth protecting. And if that is your window into one credible player in this obscure sector that's looking to build a really important product and service on top of this really important technology, what's going on elsewhere in the crypto ecosystem. And then you see companies that are utilizing distributed ledger technology and blockchain, right? Technology that's supposed to bring accessibility, transparency, cost efficiency to all aspects of different industries. And yet behind the rug pulls and the Mt. Gox and the nefarious uses of cryptocurrency to buy humans and illicit substances on Silk Road, that there's this growing momentum of really credible stuff happening in crypto and Web3. And so for me, why did we focus on the crypto and blockchain sector as a point of entry? It's because when you see a scaling momentum of companies doing really innovative things and building products and services on a global scale, and you understand how slow traditional insurance capital moves, there's going to be a point of dislocation, right? There's going to be companies that are going to need insurance products, much in the same way that this crypto custodian needed insurance to scale their business, to raise capital, to bring investors or directors on their board, to obtain regulatory authorizations from financial services regulators, to engage in contracts with companies in traditional tech or traditional finance. All of these things require insurance. And in order for credibility and scale to be built within this emerging area of finance and technology, whether the founders and entrepreneurs and executives of companies in crypto Web3 realized it, they were going to be dependent on the availability of informed and dedicated capacity. And we felt that opportunity to move the needle, provide those products and services wasn't going to be a window that remained open for a quarter or 2 quarters, right? We felt this was an opportunity that was going to remain open for years. And what we wanted to be able to do is launch a carrier whose starting point was focusing on companies doing innovation, right? Leaning into the future instead of the past, but doing it in a really deliberate, selective fashion. And we felt that if we could develop that acumen for the technology, a genuine appreciation for the way that these companies were trying to bring credible product to a market using technology that we really believed in, we genuinely felt that we could move the needle in an industry where balance sheets could readily dwarf the one that we were bringing to market. But what they couldn't do is compete with our appetite and genuine interest to support companies doing innovative things. So that's a very long-winded answer to why crypto, why Web3, why did we start there? It was a combination of belief and opportunity.
Actually, I love the answer so far. Joseph, I've got to touch on the questions we're supposed to talk about. So in the intro, I talked about Alpha Web3, and tell us about the products you have. Alpha Web3 and Vista Web3, cool names. What do they do?
In April of this year, we rolled out a suite of these Web3 tailored insurance products that you just referenced. Sigma, which is a management liability package policy, and a package policy, for your users who aren't aware, is a way for a company to obtain access to the most critical coverages that they need in order to scale their business. In a sector where getting D&O insurance, directors and officers liability insurance, is really difficult, imagine needing to get also professional liability insurance and cyber and crime, right? The ability for us as an informed provider of coverage with a very broad appetite for companies operating in the sector to do that in an efficient package product was really important. And so we brought Sigma to market. Alpha is a very similar package product geared toward alternative asset managers, right? Hedge funds, venture funds that were really focusing on companies operating within the crypto and Web3 space. We also rolled out a product called Vista, which is our commercial crime product. And similar to that moment of enlightenment working with the US custodian back in 2018, our Vista commercial crime product covers the full spectrum of traditional crime perils, but also, of course, most importantly, the full spectrum of exposures to loss arising from providing safe custody digital assets. We also have a product called Aura, which is a really cool iteration of a product that we've been underwriting since 2021, which is really, it's a splashing policy, right? Really geared toward crypto native exposures arising from companies validating transactions on proof of stake networks and providing a source of financial recovery in the event of slashing penalties and missed rewards. And then finally, we have a product called Nova, which is our comprehensive standalone commercial cyber insurance product that covers not just Web2 cyber perils, but also cyber perils in Web3. So it's 5 products. I agree with you. Thank you. They are cool names, but it really is the culmination of underwriting companies across the sector for the last 4 years and putting that underwriting data and insight to work.
What's the end game? Do you want to be Relm Insurance? We cover 50% of the cryptoverse. Is that the end game, or is crypto just 20% of the pie? What do you want to do? What's the future, as much as you're able to talk about it?
Yeah. So I think starting with the work that we've done in crypto Web3, I think is an important perspective to understand where we're ultimately headed. We have a belief in the blockchain and DLT space, and that's whether crypto is mooning or headed in a more unfortunate direction. Our objective is to go deeper and broader into the sector with products, solutions, and strategies that are going to help these companies scale their business. And when you look at the potential for product evolution, taking a traditional product like directors and officers liability insurance and expanding that scope of coverage to include token holders as shareholders, or to include the availability of coverage for various token related claims, much in the same way that a traditional D&O policy would avail coverage for breach of fiduciary claims arising from more traditional shareholders, right? Those are, I think, important, but less exciting product innovations that we've been working on for the last 4 or 5 years. But when you look at the evolving types of products and services and transactions that are happening, even in centralized finance, but also in decentralized finance, it is a very broad canvas that I think is going to enable us to put a lot of our underwriting acumen and our sector expertise to work to continue building really interesting products and solutions for these companies. And in that sense, I think, and I believe this, we've done the least interesting things that we're going to do in the last 5 years. And when you look at our vision statement for Relm beyond Web3, right? Our vision for Relm is making innovation resilient. That as a company is something we can galvanize our underwriting team around. Every core function of this company is really geared toward leaning into the future, understanding where these new and emerging sectors are popping up that are going to be transformational, and developing an acumen and an appetite to move into those sectors before and ahead of the rest of the insurance market, build distribution, build product, build engagement so that we can underwrite faster and smarter, but most importantly, in a really supportive fashion for these companies.
I totally agree. It's what the world needs and what various different sectors need. Given where you are at the moment, right? What's the 1-year plan? What's the next thing you said? Build distribution, right? Where do you want to be distributing that?
Yeah, it's a great question. And I think when you look at the challenges of operating in a really regulated market like insurance, combining that with a very high risk aversion for companies operating in these new sectors, it's challenging to do what we consider to be one of the most important things that we can do for companies operating in a sector like Web3, which is we want to maximize the accessibility of our capacity for companies doing new and innovative things. And when you look around the globe, you can try to maximize the accessibility of our capacity by working with other insurance companies. So let's say there's a concentration of really important activity in the crypto and Web3 space in the APAC region. As a Bermuda domiciled insurance company, it's very difficult for us to directly write business in the APAC market. So realistically, we would have to find, let's say, a Singapore or Hong Kong domiciled insurance company that's comfortable with this risk, have them write it for us, and then reinsure it to Bermuda, right? It's a pretty convoluted way to try to open up markets. Or alternatively, we could take these really important strategic steps to ensure that we have the appropriate authorizations and the infrastructure in the most strategically important jurisdictions around the world. And what does that actually mean? These are the jurisdictions where the innovation is, where the capital is flowing, where the regulatory frameworks are becoming more clear and supportive of the types of companies that are doing the things that we want to ensure. And so long term, in the next 12, 24, 60 months, really the objective is to ensure that we have the appropriate authorization framework and infrastructure framework to bring these products to market as
That's
quickly as
awesome.
possible.
Let's say somebody's watching this on YouTube or they're watching a short and like, oh my God, I'm a small DAO, or let's say like a bigger. I did a social media graphic for the company that I work for. And it shows like the top 10 protocols and their treasuries. And one was like number 2 was Mantle, which is a new layer 2. If they're watching this video, what is the first step for them to get in contact with Realm? Is it an email? Is it a phone call somewhere? Like, how do they approach you and what happens after that?
The easiest thing to do is to directly reach out to us, right? We have a link on our website where we get what I think are some of the most fascinating inquiries to engage with companies on just a dialogue of how we could imagine putting together a product or strategy to help solve a problem. And I think that's where so much of the interesting stuff that we do ends up happening, because I'd love to sit here and say, whether it's me or our underwriting team, we're so innovative and we're so forward thinking. But the reality is the best ideas that we've had for evolutions to our products or ground up product development initiatives have come from collaboration with companies operating in the sector. They're coming to us and saying, I have a product that I want to make available to institutional investors, but I need to be able to provide them with an extra element of security in order for them to commit funds to our platform. We will roll our sleeves up and dive into that potential use case. We've worked with, if you look at the original slashing product that we rolled out back in 2021, this wasn't a technology that I had a lot of experience with, but we were able to engage with one of the most credible infrastructure providers in the proof of stake game and collaborate with them on the technical aspects of risk mitigation, right? How are they setting up their servers and infrastructure in a way that mitigates loss? What are the points of vulnerability? What are the different protocols for which they're providing staking? And what do the slashing penalties look like? What's the severity, right? And so you go through these exercises that I think a lot of insurance companies just aren't willing to go through, right? We want to start with a problem and work with you to try to find an aligned solution. And so, question, what's the best way for these companies to reach out? We're extremely accessible to have these types of conversations. I think where it gets regulatory is when we start talking about the terms, conditions, and pricing of coverage, right? Insurance being a heavily regulated industry, we don't ever want to be putting ourselves in a position to act as if we're directly placing coverage with a particular insured in a market that we may or may not be authorized in. And so once we move past that exploratory phase, we've got a fantastic network of independent brokers, right? Distribution partners globally that then will interact directly with these customers to ensure that they've got access to the right markets and products. And then we can make sure that we're continuing to support them, not just in a very aligned and supportive fashion, but in a compliant one as well, which is, of course, really important.
On the other side of that, do you have anybody in your team who's going out and pitching to these Web3 companies and saying, hey, we understand your industry better than anyone else, so that's why maybe you should consider Realm Insurance?
Yeah, I mean, we've been really fortunate over the last 5 years as a differentiated, fully regulated commercial insurance company to have products and an appetite that's put us in a great position to have a lot of inbound deal flow, right? Once we have the opportunity to support a company, whether it's let's say it's a hedge fund, right? Or let's say it's a venture fund manager. Once we're able to solve whatever initial problem or need they have, our objective is to see how we can maximize the utility value of our products to help these companies scale. A good example would be an asset manager will come to us for comprehensive coverage through our Alpha product, which is investment managers insurance, covers professional liability, directors and officers liability with a fully integrated commercial crime product covering, cold storage, hot storage, et cetera. And of course, like most, and that's a really important product, they almost have to have that coverage if they're going to be taking capital from institutional investors, right? Those investors want to know that if you as a hedge fund manager are making dumb decisions or negligent decisions that are going to result in financial loss, they can sue you. And at the very least, you're going to have an insurance policy that could potentially pay out. But if you look at the way that a lot of these hedge funds are operating, right? They're so dependent on centralized exchanges, right? They're so dependent on being able to make efficient, liquid transactions, which means you've got to park funds in hot wallets of exchanges that you have no control over. You may not even necessarily understand exactly how this security is being provided. And so that creates a point of vulnerability, right? That creates an element of concern that could potentially prevent really important investors from committing capital. We've had the benefit, right? This really, I think, privileged position to also underwrite some of the biggest exchanges in the world, where we've been able to see the wallet infrastructure, right? And so we've recently come out with an exchange default product, right? That contemplates not just default of some of the largest, most important exchanges and the impact it could have on select customers, but also the theft of cryptocurrency held in these hot wallets, right? So if you're a hedge fund manager with a lot of other people's crypto that's being held on 1, 2, 3, 4, 5 different exchanges, there's a potential way we could use our exchange default product to add an extra element of resilience and security to your overall proposition. So we always see the first engagement with any insured as our foot in the door to try to demonstrate other ways that we can work really closely with them to try to build value and security around their company.
Joe, thank you so much for that answer. We've had such an incredible interview today. I really appreciate you taking the time, to do all of these questions, and we've been all over the place, but it's been fun. It's been awesome. You brought so much good energy. Before we end off today's show, I wanted to ask you if there's anything else that we haven't talked about that you'd like to talk about and sort of introduce to our audience or recap what we've talked about today. The floor is yours. Take as much time as you want.
Yeah, I would say that when you look at what makes a good insurance partner for any of the companies that are operating this space, particularly asset managers, you want to make sure that you're working with an insurance company that's going to be there in good times and bad, right? Very much like a solid personal relationship. And I think one of the really important kind of hallmarks of our genuine support for companies operating in this sector is to see how we reacted after the absolute crypto market meltdown that kicked off with the Terra Luna collapse, right? There was so much momentum going into 2022 until May, when Terra Luna collapsed. $80 billion of market cap evaporated from the market, and this domino effect kicked off. And I think that was really the point at which I think our underwriting philosophy was tested. The sustainability and profitability of the way that we were approaching the market was ultimately tested. But I think most importantly, our response on the back end of that was to come out with more products, right? Our response on the back end of that was to try to engage more deeply to understand really important aspects of vulnerability within the space related to aggregation exposures and black swan events, and trying to understand how the interconnect of this industry can potentially be mitigated, not removed, but mitigated through really informed underwriting initiatives. And we have an appetite to put our sector expertise and underwriting experience to work in a way that will hopefully continue to put us in a privileged position to lead the market with really great products. And so we're committed to it.
Joe, thank you once again. Before we end up today's show, of course, Relm Insurance socials will be in the show notes for the YouTube video. But is there anything you'd like to add about yourself? Is there any place for people to follow you? Is it X or is it LinkedIn? Please let us know.
I'm on LinkedIn, so that's probably the best place. I've never been much in the way of social media, but we have a lot of our underwriting team that's active on all the social media platforms. We've got some Bitcoin maximalists on staff. We have some big believers in DeFi that engage in a lot of our underwriting initiatives. Yeah, find us. Great place to start is our website, and then you'll see a lot of our socials on the website.
Perfect. Thanks again for making time today. It's been a wonderful interview. Hopefully we get to catch up in 2025 and see what's happening with the Relm, what's happening with the, at-risk insurance industry, because it's been an awesome conversation. I want to continue, and I hope we get to continue next year talking about AI, crypto, Web3, and everything in between.
Listen, anytime. It's been great speaking with you. Thanks so much for having me. Appreciate all the questions.